Alright guys, what is going on? It is Monday, the February 9th, and yeah, so it was a no news Monday. Basically, we just I'm probably not going to trade today since no news Monday, but we actually had a good little bullish run. So as you can see, starting out the day, we 8:30 open is about right on this candle. Okay, and so where's my line? Oops, that's not what I wanted. Boom. We had these hourly highs that are pretty good draws, and we've been pretty bullish um, all the other days. So this could have just been like almost like a continuation trade if you look at it on a bigger scale. Like we come up, have this little retrace, and then boom, take out those highs. We're now in this hourly gap. But yeah, so that was the trade today. Was this bullish trade, or I mean, us targeting these hourly highs. But yeah, we were definitely bullish. Um, here's that hourly gap I marked out. There it is. I marked this hourly gap out down here. And then as you can see, as soon as we inversed it right here, we have a liquidity sweep down, and then boom, we're just up from there. So, and we take out all these highs. But yeah, so that was definitely the trade today, was this. Bullish for sure. But I don't think I'm trading today. No news Monday, and I was kind of just watching, and then we just started bull running, and it was too late to get an entry. But anyway, today's video is also going to be an informative video on a little bit about how this stuff works. So, alright. So, if you're completely brand new to trading, we're going to go on the 1 minute so we get more price action. If you're completely brand new to trading, we're going to delete this. Okay. So these are okay. So we're just gonna start with the candles. So the red candle on my chart is a bullish candle, and then the black is a bearish candle. So bullish means price is going up, bearish means price is wanting to go down. And then you'll hear me say highs and lows and stuff. So basically, what I'm doing like that with highs and lows, you'll only you'll want to do that only either on the 5 minute, the hourly, maybe like the 30. And so, but you never want to do like highs really on the 1. Like it's not a big draw in liquidity, and that's what we're looking for. All right, so on the 5 minute, let's see. Okay, yeah, here we go. All right, so see these highs right here. Boom. Okay, we have like these almost equal highs right here, and you can see on these candles we take them out. Okay, but by taking out these highs, that's going to end up pushing us down because we just took out all this liquidity, which at this high, after what made us go down was we filled sell orders right here. So whenever we hit this high again, we're going to go down a little bit because we're hitting those sell orders, but then we're going to have our buy orders like come back through, and we're going to break this high, and then yeah, so we hit these sell orders, they fill, but then we keep going up. So that's why the market moves like where my pencil is, right here. That's why the market moves like this, right? Because we just keep filling, and then yeah. All right, so that's that. And then you'll hear me say fair value gap. Basically, a fair value gap is just an imbalance in price. It's where you will have a lot of orders flowing at once. So right here is one good example. And this on the 5 minute, so it's a 5 minute fair value gap. Basically, it's a 3 candle sequence. Here, I'll try and get a better example for people. Okay, here we go. Here's a good example. Do a bullish one just cause. All right, so it's a 3 candle sequence. We'll have candle 1. That didn't even type. 1. We're making this black. Oh no, not red. Black. Okay, and then we're gonna make it 32. Okay. So we have candle 1 here. Candle 1. I'm not moving this shit. Alright. Bro, move it. Alright, candle 1. Jesus. Alright, candle 2. Okay, and then candle 3. I'm just gonna put it above it. 3. Okay, and this, it's the red candle. It's all these red candles. Alright, so we have candle 1, 2, and 3. So a fair value gap is, see this candle's wick right here? This black line right above it? Right. Jeez, this line right here. There, that shitty arrow. Yep, that line, that's a wick. Yeah, so this wick, and then the third so the first candle's wick and the third candle's bottom wick. Wherever, if they leave a space in between, that is a very, like it's an imbalance in price. We have a lot of bullish orders in this area because price just shot up. Okay. And so that's a fair value gap. Fair value gaps are not going to be used for like just like entering off of a fair value gap. It's just kind of a confluence of like where price is going to either continue or if you're going to switch, which as you can see, that's a bullish fair value gap. It got inversed, and where does price go? Down. So I guess you could have taken a trade off that one, but also look, we just had all these highs over here, and those are equal highs, and then we had these highs over here as well, and this wick right here, boom, took out all those highs, went up a little bit, and then boom, inverse this gap. You could have gotten right there after we took out all those highs, inverse the gap, boom, wreck down. Okay, but let's look at it where it's a continuation. So yeah, this is good. So right here we have this pretty big 5-minute fair value gap, and as you can see, we go up, boom, price wants to retrace, this fair value gap comes into support, we come into here, boom, and then boom again, wicks right here, boom, we go back up, and then even a third time. This would have been your sign probably to go long, or well, it would have been after, there's not a gap there, so okay. It probably would have been like after, since we're on the 1 minute, I probably would have done this top one. So we have a bearish fair value gap right here with triple equal highs. Anyway, so we come down and we come into this gap 3 times, and on the 3rd time, boom, what happens? We respect this bullish fair value gap. Boom, we disrespect the bearish fair value gap up here, and then look, we take out these highs like I mentioned earlier, have a little retrace, boom, say you could enter there, and then what do we do from there? Just freaking rip up. So that's kind of how we get our biases and stuff, and then how we enter trades is all off of liquidity, highs, lows, and then gaps for continuations. But yeah, so that's basically kind of how that stuff works. I know you heard me use the term liquidity sweep earlier. Basically, that's where the market makers will move price down just to get better fills on their entries. So then they will, like, look, watch. We come here, we go, and like I said, we just had inversed. I know it's not marked out right now, but we had just inversed the hourly fair value gap that I had marked out. And then, boom, we take a huge hit down. That's the liquidity sweep. They're dropping the price to get their fill orders. And then, boom, what do? Just completely rip up. So, yeah, that's what a liquidity sweep is. They just basically juke out people like us trying to day trade on the markets. And, yeah, they have enough capital to actually move the market. to get better fills for their orders. So yeah, but that's what a liquidity sweep is. Just drops down and then boom, fakes you out, goes all the way up. But yeah, so that's kind of today's recap. Probably not gonna trade today. I'm really just honestly trying to watch crypto and stuff also, but yeah, but I bet we'll trade tomorrow. I think we have CPI sometime this week, so that'll be good. But yeah, it's a little tutorial on how I look at the market. Oh yeah, and then one other thing I didn't mention was daily bias. It's very important. Like I came into today knowing that we have these hourly highs, and what we do, we took them out. So our group says on that. I think we started like in here, but wait, no, it's Friday. Yeah, so we did start in here. Okay. Yeah, so we had this hourly high, and yeah, we took it out. Now we're in this gap right here. So we'll see if we want to respect it or break it. I think we'll break it, take out these highs, and then maybe move lower from there, but who knows. But yeah, that's kind of how I look at the market and today's recap and whatnot. So thanks for watching. I'll catch y'all tomorrow morning.